I didn't know it was possible, but guys, the market was down big today. The NASDAQ finished down 1.65%. The Dow was down over 400 points. Keep in mind, though, NVIDIA still keeps its march going. It was up today. Guys, welcome to the new Everything Money 24/7 channel. Please subscribe if you're interested in see us react throughout the week on earnings reaction, news, Fed, anything possible that sparks our interest. We will react every single week, several times a week. So please subscribe to the channel if that interests you, and only if that interests you. So guys, a lot of red out here. Microsoft down 3%, Apple down 2.9%. There's a lot of talk out there that Warren Buffett's selling his shares. Not gonna lie, if that's the case, I'm gonna be very disappointed in the guy. I thought you talked about being a long-term commitment. Google wasn't down much. Telecom was up big today. Look at this. I think every company in telecom, the S&P, was up today, including AT&T. I saw a report today that said AT&T may be an investable company right now. I don't have an opinion on that quite yet. Diversified banks all up today, including Citigroup, JP Morgan, Berkshire Hathaway down slightly. Tesla off its lows of the day, down 4%, down 4% at the end of the day, but was down 5 or 6% throughout. So a lot of red. Pullback. Who knows what happens? This is the big company that everybody's watching for, though, NVIDIA. I can't believe this company keeps on going up. But guys, markets can stay rational longer than I can stay solvent. So keep that in mind here when looking at these companies. But guys, look at this. In the semiconductors, NVIDIA was the only one that was up. Look at Intel, down almost 5.5%. Everybody else was down. NVIDIA was up. Incredible. Guys, great company. Remember, company, stock price are very different things. Story and numbers are what you have to look at together because, as Professor Aswath, a friend of the channel, says, a story without the numbers is a fairy tale. Numbers without story is an Excel sheet. That's all it is. So we need to sit there and marry these two together. The story on NVIDIA is awesome. Has it gotten out of hand? I don't know. That's something we're going to see in the long run, but it wouldn't surprise me if over the next 10 or 20 years, NVIDIA didn't hit these highs that it's hitting today. Again, that's an extreme statement and can feel very extreme. But the question is, where do we stand in the market with new all-time highs on the Dow, S&P, and the NASDAQ after seeing a 2022 fall in all of those three indexes? That's the incredible part. If you watch our main channel, Everything Money, you've seen me pull out the stock market to GDP indicator and the 10-year cyclically adjusted PE ratio. Let me pull them up right now to show you where I think we stand in terms of valuation. So this is my stock market to GDP ratio, which I actually updated just yesterday. So I got to change this date to March 4th, 2024. And here, guys, we're looking at a ratio of 1.839 versus historical average of 0.91. We are 96%. Actually, it's probably a little bit higher than 0.91 now. We're 96.2% overvalued when it comes to adding up all the market cap of the S&P 500 and comparing to GDP. The logic behind it, what Warren Buffett calls the most reliable indicator at any given time, is that the U.S. economy is going to grow and the largest companies within it should grow along with it. So the ratio will probably work in tandem. As the GDP grows, so should their market caps. Now, a lot of people out there will inaccurately say that this thing doesn't matter anymore because so much money is earned overseas, blah, 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 blah. Whatever excuse you need to feel good about yourself, please do. But for those of you who are real true value investors and realize it's not different this time, let's go show you the 10-year cyclically adjusted PE ratio, which factors in the profit of the S&P 500, no matter where it's earned, for all you naysayers out there. And guess what? It's actually worse. 102% overvalued. Now, guys, how can this work out in the future? Well, a couple ways. Massive inflation. If we saw 30% inflation for a few years, that would make these indicators, that this GDP skyrocket, and it would make profit skyrocket at some point. It would catch up and these indicators would go down. Okay, that's one way. Second way is that it's just different this time, right? People are okay paying 35 times the last 10 years profit for earnings today. Is that possible? Sure. If rates were 0 or below 0, I could understand saying, listen, I'll take 3 or 4% on my last 10 years with an upward economy, but rates are now much higher. That was the whole argument about why lower interest rates were better for the stock market. But we saw rates go from 0% to 5.25 to 5.5. And everybody's like, don't worry, 2024, they'll lower rates. And now there's talk. There's actually somebody out there who came out today and said, not today, last week, and said, I don't think they're going to raise rates at all in 2024. Who knows? I'm not here to guess what's going to happen. All I'm here to say is this is expensive as hell. And it's not within some 10, 15, 20% overvalued range where it could really grow into that value very easily. Okay? Or the third way that this all works out okay is prices fall. Okay? Now, prices fall, it brings these percentages down. What's easier, for fundamentals to double or prices to fall? The more and more we get overvalued, the more likely there is a crash. When? No idea if ever it'll happen. But when times are good, like we're in right now, when this is what I love the most. The smartest investors I'm hearing about, when I say smartest, the people who are the cockiest, are the ones who I wouldn't let them balance my checkbook. It's the morons who have no idea what's going on in this world, who don't understand when they buy a company, what they're buying. That's what I see out there. Is that vicious? I'm sorry. I'm just sitting here saying there's no reason why my neighbor's 17-year-old pimply kid should be buying crypto and all these high-flying companies based on the fact they're going up, and they'll end up being right. Look at NFTs. Where are NFTs now? That was a hype for a while. Now, I could be wrong in all of this. I have been wrong so far. This has been the longest insane bull market I have ever even heard of. This is worse than the 2000.com. This is worse than the 1928 Great Depression. That's how overvalued we are today. Now, this valuation metric, the 10-year cyclically adjusted PE, got worse in 2000. It was upwards of 44. So it's definitely below 2000's .com crash. But guys, at the end of the day, every investment is the present value of all your future cash flows. And stocks just keep going up. NVIDIA just keeps going up. NASDAQ's down 1.65%, NVIDIA's up. Does that seem logical? NVIDIA is a $2 trillion company. It has about the same revenue last year as Intel. Now you might sit there and say, oh my God, he said Intel comparing NVIDIA? I know. And guess what? 24 years ago, the same was said about Intel. If you compared any company to Intel, what's this idiot doing comparing Intel to these companies? Intel's so far ahead of the game. Intel hasn't seen its high from 2000, even though its revenue and profit are 3 and 5 times higher, respectively. So guys, I'm not Debbie Downer. There will be a time when I'm saying buy stocks, and people out there will be saying, this guy's an idiot. He says buy stocks. What an idiot. Look, he bought stocks and they went down. Yeah, buy great companies at great prices. So if that's what you like hearing about and you're new to any of our channels, subscribe, listen to it. And guys, if you want to skip all of these, go to everythingmoney.com. We have a great community there, $7 for 7 days. Go check it out. Easy way to get ahead of all the news, talk about it live in action with me and the thousands of others in our community. $7 for 7 days.